Let's go. So, ladies and gentlemen, on behalf of Banque de Luxembourg, I would like to welcome to our new auditorium for this session of the Midi de la Microfinance. We are grateful that so many of you have chosen to be loyal to this ADA initiative, especially that you resisted the temptation of sunbathing in a park. I haven't seen the sky for the last 2 hours, but it was shining just before. So our bank has also been a loyal partner alongside ADA since the launch of the Midi de la Microfinance some 12 years ago. The support we are giving to this conference cycle is an extension of a broader CSR policy. As you may know, for years, we have been actively promoting development of philanthropy, of social entrepreneurship, and of impact investing in Luxembourg. We also have decided to be active in this area, not just because we are interested in these topics, but because we have an interest in their development and the impact they can have on people and society as a whole. We also have been pioneers in the development of philanthropy advisory services here in Luxembourg. We also were the first bank to set up a specialist division devoted to investment funds and services for third-party manager funds. Today, Banque de Luxembourg is known as a key player, especially in the segment of social impact investment funds. We believe that today, having an interest in the initiatives we support makes us a more committed, a stronger, and a more loyal partner because it fosters win-win situations. As a further proof of our commitment to the cause, we have a common interest in the promotion of microfinance. We have launched several microfinance funds in the last years, and we are very interested in the development of the sector. So welcome to this 47th session of the Midi de la Microfinance, devoted to pairing inclusive finance and insurance. Before giving the microphone to Matthew, I would like to thank you all for your attention, and I hope you will enjoy the conference. Thank you.
Thank you, Jeremy. I'd like to welcome you to the 47th Midi de la Microfinance. As usual, it's organized with the support of the Luxembourg government, the Banque de Luxembourg, Infine, and of course the microinsurance network. My name's Matthew Gensini. I work for ADA. I head up the unit for technical assistance for microfinance institutions. I'm also a new board member of the microinsurance network, which is a network based here in Luxembourg, which brings together all the different organizations that are involved in the provision and promotion of microinsurance. So we're talking about insurance companies, we're talking about reinsurance companies, we're talking about regulators, NGOs, development organizations. So we aim to bring all these groups together to increase to promote microinsurance. Today I'm joined by my distinguished guests. On my left is Anne Molindwa, who is CEO of Finance Trust Bank in Uganda, and Gilles Renouy, who is the Director of Microinsurance at Women's World Banking. Before I let them speak, just to quickly go over the objective of today is really to discuss insurance and how pairing insurance with other financial services can have a positive impact on the end clients of institutions like Anne's. But just to gauge the room a little bit, if you could raise your hand, who knows what microinsurance is? Okay, so just two minutes, so I think that's about half. Just to give you a quick explanation of what microinsurance is, it's essentially insurance for a specific segment of the market, which tends to be undereducated, tends to be have very little access or no access to traditional insurance services, are underserved, and most importantly are vulnerable. Very often people describe microinsurance as insurance back to basics. So it's insurance in its purest form, which has four kind of distinct elements that for it to be successful. One is it needs to be affordable, so it needs to be developed kind of taking into mind the income of the target population. The next, it needs to be accessible, so they need to be able to access it, they need to be able to buy it, they need to be able to claim very easily. It needs to be adapted, so it needs to be adapted to the needs of that target population. And then the last element is it needs to be reactive, so it needs to be efficient in its claims handling. These are people that, when they make a claim, they're going to need the claim to be processed in a very kind of rapid fashion. Now, normally above my head should be 4 data points, which we chose to put these up there just to give you an idea of the opportunities and challenges that there are in microinsurance. So on the right is Africa. So you've got 5.4% of the population in Africa have microinsurance. So as you can see, there's a massive potential to increase this penetration rate within Africa. That data dates back from 2015, so it's probably changed since then. The second one is regarding mobile subscriptions, where 444 million Africans have mobile subscriptions. So this is people who have mobile phones, mobile data. So this represents a massive opportunity for accessing insurance services, not only insurance services, but financial services as well. And then on the right is more specific to Uganda in the case of Anne. So we're looking at the challenges here. So what types of challenges do we have? If you look at the number of dialects in Uganda, there are over 40 different dialects. That means that you need to be able to communicate in 40 different ways with your target population, which essentially kind of increases the challenges 40 times. And then lastly is the maternal mortality rate, which is 336 per 100,000. If you compare that to Luxembourg, which is at 10 per 100,000, you can see the massive difference there. So now I've set the scene. I think I can turn to my guests. Anne, do you want to tell us about yourself and tell us about Finance Trust Bank?
Thank you, Matthew, and I really want to thank you for the opportunity given to me to share the story of Finance Trust Bank. Finance Trust Bank is a bank located in Uganda, having started 35 years ago. It's a bank that banks women first, though we also bank men. And over the 35 years, it has seen quite a number of transformations. It started as an NGO, became an MDI, and later we became a fully fledged bank. We deal with microfinance products, so it is handy to discuss this topic of microinsurance. It makes our products more attractive. I am the managing director of Finance Trust Bank, and I sit on various boards. This gives me quite good experience to see how other people do things. So I'm here to share the experience of the bank. And here the bank has 36 locations, serving over 500,000 customers, of whom we have over 26,000 borrowing. And all those are covered under microinsurance products that I'll share with you.
Okay, thank you, Anne. Gilles, can you tell us about yourself, Women's World Banking, and what's your relationship with FTB?
Thanks. Hi, everybody. So I'm Gilles Renouille. I can't resist to quote that I used to live in Luxembourg and work for Arbet, so it's really a pleasure to come back in a completely different role 20 years later and feel just at home. So thanks for the invitation. My background is insurance. I was a civil engineer. That's why I was working for Arbet. And I moved into insurance and did corporate insurance and did a number of lines of business and then moved into risk management. And a few years ago, I decided that I wanted to kind of bridge the underserved population and understanding what I've learned in insurance in 20 years. How can I apply that? And taking the lens of insurance companies of saying, if we're going to develop something, can we make it viable? Can we deliver value to the clients and make it viable? And I think, to me, the microinsurance challenge is, as you said, bringing it back to the basics, but really making the outstanding experience for these populations, because they are the populations of the future. So in terms of who Women's World Banking is, we are a network of institutions. We were founded in 1979, so we just had our 40th anniversary. We're a network of banks, financial institutions, microfinance cooperatives, and now we're expanding to working with mobile network operators or fintech. And generally, we have three pillars. We have one product development area in which I sit, which is the strategic advisory, and that provides the women-centered design. We basically deliver technical assistance and help institutions to solve their problems. The second pillar is leadership and diversity. We've realized that if you want to actually target women, you need to have women in leadership positions in the banks and in these institutions. And as you do that, you have a better bottom line and you are able to acquire more women clients. So we work on this and linking the business case of why women are a good segment to the leadership. And the third pillar is an investment fund that we have that is a gender lens investment. We invest in companies like, as Anne was stating, when you're a microfinance organization and you're transforming into a bank, you need capital, and so this investment fund invests there with the lens on the women segment. So we want to invest in companies who have identified the women as a segment.
Okay, thanks. That's really interesting. And coming back to you, can you tell us about how and why you decided to include insurance in your portfolio?
I think we all appreciate that insurance comes in for risk mitigation, and we thought that also as microloans were risky. So we went out looking for partners who could offload that risk, and those were the insurance companies. In this, we started with the credit that we give, and we saw that many times customers die, all their catastrophes, and they don't have any fallback position. So we give our customers what we call credit life, and here when they die, the insurance company comes in to pay the balance that stands into principal and interest. That one reduces the risk of the bank from losing the entire balance. So we have that one as a product. We also have a product for women borrowers. You see, when you're lending to women, you must understand their needs. Women have quite a lot of needs, and this stems from their health. We saw that if our women are healthy, they'll be able to pay back the loans. So we give health insurance to women, and they are able to pay the premium over a period of 12 years, but accessing the service. Now, we have a special product called Hospital Cash. This one we developed in partnership with Women's World Banking, and it's targeting borrowers, irrespective of sex. men and women are able to take that. And for us to easily roll it out, we made it mandatory. We first piloted it in a few branches to see if customers will appreciate how does this product work. For every borrower, you are supposed to pay every month about $1.5 to secure you just in case you fell sick and you went to hospital. And most of the businesses for microfinance, the business and the owner are almost inseparable, meaning that if this person is in hospital for a number of days, the business is suffering. So this product comes in handy that when the person is in hospital, he's compensated for at least to a maximum, depending on the period of the loan, but as long as the person is hospitalized, even up to a tune of 40 days, the person will be compensated. Every night, they pay about 80,000 will translate into about $25 per night spent in hospital. There are guidelines because we don't want this abused. Only registered hospitals. If you go to that hospital, that's when you can be able to claim. And we find that this comes with quite a lot of benefits. But we see that customers that are onto this product, they lack awareness about microfinance. In Uganda alone, the penetration is under 3%. So it is still a big challenge to sell insurance because people think there are other ways to survive without insurance. In economies like yours, it's a given. Everybody knows the importance of insurance. Where we are coming from is not an easy sell. So that's why, as a bank, we said, because we know what we are doing, we know what we are saving you, is part of the loan installment. So the pain and the expectations are less. However, sometimes they have questions. If I don't fall sick, will I get a refund? When you say no, it's almost not that much, very much attractive, but at least when that comes through, somebody will smile when the claims come through. Now, you're going to ask me, how do you do it as a bank? We had to partner with an insurance company, in this particular case, UAP. They came on board, they understood what we wanted to do, because we had the consultants on site, they worked with us through the product development, through the piloting, and even us as the staff of the bank to appreciate the background why we need customers to appreciate this hospital cash. I'll share with you some experiences of people who have gained from this particular product. It's beautiful.
So coming back to the main challenges, you talked about awareness, you talked about making sure that the product is adapted to their needs. What other challenges, especially in the relationship with the insurance company, what main challenges did you face there?
I think one of the things we must appreciate that this is not a product coming from the insurers. It was a product coming from the bank, and you want the insurers to appreciate your product. Now, that appreciation took some time. Looking for the partners took some time. Agreeing on the premium, it looked so small for an insurer to take just $1.5 and then cover people when they're in hospital for that size per night. So that was a challenge. Putting systems in place. Because this product is quite new, and we are the only bank offering this product. Putting systems both at the bank side and the insurance side was a challenge. And I cannot tell you that we are there in terms of system development, because there are still some manual interventions. We've been discussing with Gilles that what can we do to improve so that it is instant. Some of the challenges that we have is turnaround time on claims. You have told me when I'm sick, I'm in hospital, I can get this money, be able to pay either my bills or help me with the loan installment. How long do you take to compensate me? We have seen that sometimes claims can take a month. And the question is why? Because there are procedures for a claim to be approved. The documentation has to be reviewed. We must check that you are in the right hospital registered, so that back and forth poses some challenges and does not amuse the customer. Some customers refuse to leave the hospital until the claim is honored. So those are some of the challenges. In the face of the client, they don't know UAP. The customer knows the bank, and the money is paid to the bank. So there is a need to bridge that us and the insurer, the turnaround time is very minimal. And here we are saying that the insurers should allow us pay. As long as I've done my due diligence on the patient, on my client, and I know that it is claimable, I pay and book a receivable from the insurance company. Another thing is awareness. It's a big-time issue. Insurance, even as you see before you like myself, insurance is not easily appreciated. I'll give you just an example that you have third party on your car. You don't knock the whole year, nobody calls you to say, oh, are you okay? The insurers take that money, and everybody seems we are working for the insurer, which is one thing that the insurance companies have to fight. But now we are here as a bank positioning ourselves with a product. Now, the responsibility is on the bank, on its customers, to create that awareness. And as a bank, would like to get partners who think insurance is good, like microinsurance is good, to increase on the penetration, to support the bank in creating that awareness. It's expensive because the category of people we are talking about are people at the lower end of the pyramid. They don't understand in one sitting. You have to keep going back and going back. And what we have seen as a challenge to us as the bank is the claims ratio. We think that the claims ratio is still too low, under 25, meaning who benefits more? It's the insurance. It's a challenge because the purpose of why we have this product is not to make the insurance companies richer, but to make sure that the clients benefit. So when the claims ratio is low, there are some questions you ask yourself. Is it because my customers are healthy? Maybe yes, but the answer may be no. They're not healthy, but they don't know how to claim. So we need to create that publicity among our staff to encourage customers claim in the rightful way, and also at the time when they are taking loans. This is the time when we communicate this particular policy. The customer does not want to know about insurance. They want their loan. Is my loan on the account? That's the only thing they want to know, because these micro customers borrow at the time of need. The need is there and it has to be closed. So now, for you are talking about insurance, the ear is blocked. Because that is secondary. It's not my primary issue. So I think the timing of communicating this could also be wrong. We have another challenge of our staff turnover is quite high, meaning that you have new entrants, but sometimes we may not have inducted them well on this particular product for them to continuously communicate to all customers on their rights. What are we going to do as a bank? We are going to still partner with them to create that awareness, but we need everybody to say these people need protection because they are gains from customers being under insurance. I don't know whether I've answered you.
That's perfect, yeah.
Thank you.
That's perfect.
I find it interesting. You went through the operational issues, and I think there are operational issues. To me, the main challenge is trust. And I think this is exactly the topic of the conference today, is how do you pair microfinance with microinsurance? And you're quoting on what you were saying, and sorry if it'd be obvious, but when you take a credit, I need something from the bank, and they're going to give me money, and they need to trust me to pay back. When I do insurance, I'm going to give someone money, and I have to trust them that the moment I need this money, they will pay it. And in this segment, people have to make decisions every day where they prioritize. And they have not tested insurance. And so this is where you come into this kind of catch-22 is how do you create an environment where clients will get to experience a positive process of insurance. And you were saying, if I don't get sick, do I get my money back? And we get that all the time. Two things I would say on that is that when you do the pricing such that, you were saying $1.50, most of our products are around $1 or $1.50, and they pay something like 20 to 30 times the amount that you pay per night. So if you paid $1 a month in premium, every night you spend in hospital, you would get something like 25 or 30. It means that in 1 year, you pay $12. And these people have a very good understanding as they say, well, wait a minute, when was the last time I was in hospital? These things happen. They see that it's in the money. So this is where the trust comes in. But when you have this discussion on saying, well, look, I'm not going to pay you the money back, but what do you do when you fall sick? You get money, you borrow money from your friends, and you have to repay this money. And what I found very often in our focus groups is that the clients realize, wait, are you saying that I'm just getting this money and I don't need to repay it back? Their understanding of insurance is very low, so very often they think they're paying a premium to get the right to get a loan later on, which is not the case. And then they start thinking about it and really using it. And so, as I said, the pairing of the two is really great because when you do the borrowing, you have a number of interaction with them. You collect the installment. You pitch the loan. So you have multiple interaction, especially with women. We find that this is very important because they have questions that they may don't want to ask on the first day, but they want to speak with their family or with their husbands or with their friends, and then they would come back on the next repayment and ask these questions. And they can build trust. And when the payment comes, when they experience the positive side of insurance, then you have the good word of mouth. And I mean, as Anne was saying, we have some challenges in terms of the loss ratio. But I think I was there 2 weeks ago, and what I found really exciting is that when you look at the branches that we piloted, that most of the claims are actually coming from these 5 branches. So people, when they understand, they use it. And now Grace, the insurance supervisor there, sent me the data this morning. From the last year, 75% of the claims were made by women. And in this portfolio, you have something like 35-40%. So, I'm Women's Health Banking, you focusing on women. Our goal is how do we make the best experience of insurance for women? And we see that when they understand it, they use the product, and they are then the ambassador for insurance. And so I think the trust, the operational issues, of course, they are very exciting. But the trust is really that nut that you need to crack everywhere, both with the client and with the insurance companies.
There's so many interesting points here. The trust issue, the debate over whether insurance products should be voluntary or should be compulsory. This is a whole debate over, I look at the insurance products that I've bought myself. The majority of them are because I've had to buy them. I haven't voluntarily bought them. So, compulsory insurance does work, and it alleviates a lot of other risks. But from the kind of financial and social performance of your institution, how has that affected the inclusion of insurance? How has that affected your performance as an institution?
It is a positive thing because one, we are not onboarding that risk anymore. Somebody else will come and stand in for us. And what we see is that from where we are coming from, people don't love going to hospital. Maybe they want, but it is expensive. Now, if you have a window that for whatever illness, you just go, there's somebody who will come and help you with that bill. Now, it has increased customers going to the perfect facilities for treatment. Now, what we see in our portfolio is our NPA is going down because our customers are looking after themselves well.
Can you just...
It has...
NPA.
This is the non-performing assets. They are under 2%. And you cannot say that because the underwriting was well. there's that willingness for the customer to pay, but also there's the ability for the customer to pay. When a customer is not well, we'll definitely have the loan remain in arrears, and that will affect your non-performing assets. So what we see that we have a more health portfolio, because these customers, even when they are away, they are not, because what happens, when you're sick, you are the priority. So meaning the bank will come next. All the proceeds from the business will go to look after the patient in hospital. So since now the hospital is taken care of, the proceeds from the business are banked, and now we see customers paying. And the same customers are also covered with the credit life. So we are seeing that we are running with a clean book. I'm also happy to note that the social impact that hospitals are now receiving these customers. Now, if we see a multiplier effect that more people, for example, take up such products, it will be a good thing, because we are dealing with people who self-medicate themselves. It's not like you people here, you cannot walk into a pharmacy and say, yes, it is a Panadol, and I want one Panadol. And the pharmacist cannot say no. What they want is to sell. Now, if people can go to hospital, they will get the right medication. So everything around health has improved greatly.
Mm-hmm. And then, from the point of view, from the kind of, if we're looking at the data point on mobile penetration in Africa, and this kind of digital revolution that's taken place throughout Africa, especially in East Africa, how's Women's World Banking taking this on board? How are you learning lessons from elsewhere and using them for FTB?
Yeah. So. So from an organizational perspective, as we're a network, any institution we work with would participate in certain workshops. So 2 years ago, we had one digital finance workshop in Nigeria, where we exchanged experience with a local bank, where we were working on creating a saving account for women who sell vegetables on the market. There was someone from Bima, with whom we worked in Cambodia about selling insurance via the mobile phone. I think as far as the women's segment is concerned, I would say I strongly believe in the digital as the kind of next step to be taken. But as I was saying, the trust is important. So. And we need to be cognizant of the fact that when you look at the numbers, there's a 23% gap in internet access for women as opposed to men. And if you look at Sub-Saharan Africa, there's a 14%, if I remember correctly from the latest GSMA report, there's a 14% ownership gap. So a woman is 14% less likely to own a mobile phone. So I think if you have that in the context, you have to find solutions. Now, the positive side of that is that we know from the research that women don't have time, because they have multiple tasks. They have unpaid work with the home, with the children, and there are social norms that prevent them sometimes to actually move or go to a bank or whatever, and they are more in rural areas. So having a digital platform to get access to financial products is going to go into the direction. But you need to be able to onboard them, because they will have other questions. And I think that's really the challenge that we're facing on how much, because we work with the principle of saying we want to have viable solutions. So the question is, how much and where do you invest on this segment, because you know that when the women are onboarded, they're just as good as others. They actually repay their loans even better, so they're a better segment. Mm-hmm. And we're starting to see some evidence that if there is insurance and gender-based insurance, it's even better. But the question is, what is the level of investment, and what is the quickest way of getting them onboarded? And I think that's the question we haven't really solved yet. And you have other, as I said, like, the mobile phone penetration with women in Sub-Saharan Africa is another hurdle. But we do exchange, and we try to share the learnings.
And then from the point of view of FTB, how have you kind of managed this digital train? Were you there from the beginning, or have you had to jump on to catch up?
I think with digital, we're at 80% because all our services can be accessed through the phone. Now, we want to include on the same platform microinsurance. Here, what am I talking about? Because we have a network of 36 branches. It's very difficult for somebody who sits at head office to know who has fallen sick. If you have a platform where the client can just say sick, meaning this person is in hospital, you get a way to communicate. Simplicity, because we are dealing with people whose level of literacy is quite very low. In that, if that is triggered at the insurance side and triggered at the bank, meaning that I book a risk, because this is immediately payable. Whether 1 day, 2 days, or 40 days, this is something that I have to prepare for. So what we want to do is include it on the menu and put it in the local language so that everybody can freely interact with it. But there are times when the patient cannot do anything with their phone. But the people who are looking after them should be able to access through the USSD, because smartphones are not that common, that side of the country. So what happens is that even on their small phones, they can use the USSD, access the platform, and report that one of your clients is not well. In a way for the client to build trust, if your bank called you and say, okay, we learned that you're not well, we shall be there. Please let us know how long you're going to stay in hospital. Even if you didn't like that bank that well, for maybe poor recovery methods, you say, okay, they care about my health. That's the trust that we want to continue building and to manage the turnaround time. And we cannot run away from technology. Where we are today in East Africa, technology is us running after it. It's no longer running after us. We are running, as banks, we are trying to interface our systems so much so that we are not locked out. So even insurance, we are telling the insurers, please work smarter. If a customer, because for us as a bank, we are now on bank assurance, we work like agents. If my customer wants a third party, should be able to buy it off the account and then deal with corruption, because if you don't have third party, the police will get you and you are forced to pay Kintu Kidogo. Kintu Kidogo is side, please let me go. You understand? But if I have my phone, you get me off, I get my phone, pay and say, you see, I've paid, and that is it. So technology is the way to go, and for us as a bank, we want to ensure that we embrace technology. It's going to be the unique identifier for microfinance.
I've got so many more questions, but I'm going to put it to the floor now. So if you've got any questions, there's people going around with the microphone. If you could state your name, your organization, and also who you're directing your question to. There's one here. He's got a mobile phone.
My name is Rutian, and I work for Ibiza, which is a mutual, a blockchain-based mutual. And we're deploying in India and in Niger. I have plenty of questions, so I just ask maybe first one, and then we continue. I think one of your, you said something very important, is that your customers are illiterate. And my question is, how are they aware of the terms and conditions? Because that's the key point to make claims.
How are they aware of the terms and conditions?
Okay. You can answer.
I can?
Yeah.
Okay, thanks for that question. How are they aware of the terms and conditions? Much as they're written in print, but we don't want to assume that they will read, because for us, we don't have a culture of reading. So the loan officer, who is the relationship person, because this insurance is tagged to a loan, is sold as a package. They take the customer through the terms and conditions. That's the only way we can be able to increase the uptake in terms of claims.
But I would say there are no exclusions. There are just no exclusions. So it means that, I mean, the only thing is what you were mentioning is the registered facilities, because we think that if you continue with the behavior of going to a non-registered facility, you're going to stay for 7 or 8 days, you don't get to see a proper doctor, you don't have drugs, it doesn't really work. So there is a side agreement with the insurer that they would still get a payment for that as an incentive to go to registered facility, but otherwise there are none. And I had touchy discussions about, the topic of giving birth and abortion is a big topic in Uganda, and abortion is illegal, but there was no exclusion. And the insurance company coming and saying, I'm going to send this claim back, and actually what happens is because it's illegal, and I'm not making any, ethical or judgmental statement on that, women go to non-registered, or they go to a quacks doctor, and then they have bleeding, and then they go to a proper hospital, a private hospital. And so we had lots of discussions with the insurance company on how do we deliver, what is service to these women, so that we don't even have this exclusion. It's not about making it public, but saying we want her, when she goes to the hospital and something happens, that she get the payment. And I think if you don't have exclusions, you don't have to check your exclusion list. You can make a lot of money on making the process so much more efficient, which is, I think, what we pitch with the insurance companies, of saying there is really a bunch of money that you can save because you have a much simpler process.
And presenting a product with no or little exclusions to an insurance company, I imagine, was quite difficult.
Yeah.
It remains a very difficult path. I mean, the first thing is I'm going to exclude maternity, and then you go, okay, all right. The research shows the only moment where a woman takes care of herself is when she gives birth. So basically, you're selling me a product that she's not going to use. So that's the leap of faith they need to take. And then the waiting period, because they think people would just defraud. But I have to say the partner was okay, because they said, I just can't waive that waiting period. So they had something like 30 days. What we agreed is we said, we'll do the pilot, we'll just pay these claims, but we'll collect the data, and we will prove you wrong. And that's exactly what happened. 3 months later, the insurance company said, yeah, you're right. There's no point in having a waiting period.
Okay. You got another question? Go on.
Plenty, but maybe somebody else. But yes, the latest report of the Access to Insurance Initiative says that for digitally sold insurance, usually the biggest problem is that the people who receive insurance, they don't even know that they receive insurance. And terms and conditions are very important. Next question, maybe, unless I continue.
Gilles?
Yeah, I can try to give an answer. I think we're trying to solve a big problem of getting people who have just managed to come out of poverty, and they I think if I remember the number correctly, it's 3.5 million people who have actually, on the bottom of the pyramid below the $2, there's still 800 million of people. But then the next tranches in the level 2 and 3 are 3.5. And these people are very vulnerable. They're not going to buy insurance, etc. So how do we onboard them? And so I would say there are various models like the microinsure, the BIMA, inclusivity as far as Africa is concerned. Your approach with the blockchain is also very absolutely exciting in bringing technology to the communities. I think what the microinsurer of this world would agree to say is that the freemium, so there was this freemium, there was the thought that if you have a mobile phone and you trust your phone, if you get a free product, you will experience insurance. But it's just the way as we use our credit cards and there's an insurance on it and we never use it. So this is not proven to work because the mobile operator pays a lump sum to insure their clients, and they don't end up seeing a real correlation of having these customers more sticky and using the product. And then it gets very difficult to convert them into a voluntary product. I think this has not yet been solved, but I really encourage to continue going on this path. My firm belief is that we need to do a personal experience of insurance that works, and then digital will be very easy. People will love doing the digital thing. But you want them, when they have this great experience of going to Anne's branch and collecting the money, or getting the phone call that the money has been transferred to their bank account, you want to be there as, you want them to connect the good feeling with your brand. And so I think the digital, everything on your own is going to be the next step.
Thank you. Are there any more questions? Lisa, Laura.
Thank you. I'm Laura Fuschi from ADA, and it's a curiosity because we see that in several countries there are national financial education campaign. And I was wondering if there are in your country or in the country in which Women World Banking is working with, if there are some national campaigns on financial education that can potentially include raising awareness on microinsurance. And yeah, that can be helpful working with local networks or national public authorities as well.
Okay, what I can say is that in Uganda, it's at national level, financial literacy has been picked up by the central bank. But we know very well what the central bank does. It has its own interests. It's trying to train people on how to manage money, how to access money, when to access it. All that is done from the central bank point of view. And then down here, we have consumer protection guidelines that we signed to. And here we are obliged to make sure that we take our customers out and train them. And every year as a bank, we do 4 regional workshops where we call our customers and take them through financial literacy. What I have to tell you, what we have not done is micro insurance. One is not our core competence. And here we need the insurers to also come in hand and say, here we are. But I find insurers being slow on capturing the market, because you have to appreciate something. Banking was quite low where insurance is today, but somebody spearheaded it. So we need to see the insurance companies through their corporations, associations, come out and say that let's do this together. And when we do it together, it's cheaper. So you're giving me an idea to collaborate with the insurance companies in Uganda to say that I have this conference, also come so that you speak with authority.
Well done. Gilles, do you have anything to add?
To broaden the topic, we started microinsurance 10 years ago, and the program was in Jordan. I was in April 2016. We had a focus group, and there were ladies around the table, and there was this lady who said, "Oh, I have this shop I want," and she was wearing a veil, and I'm thinking of exporting. Could we do a product like the Caregiver? We call it Caregiver there. Could we have something like to protect the health of my shop? And we go, okay, tell us more about that. And she goes and reinvent property insurance. And this is magnificent. So what we find is that all the programs, at least we tested, we had 2 outcome studies, one in Jordan, one in Egypt. The cognitive level of clients on understanding how insurance works, and even on the loan, is higher on those who receive claims payment. So that's one thing, that's one piece of evidence that makes us very confident. The second thing I want to say is that we have developed something that we call the awareness score. And my viewpoint is that financial education, just for the sake of financial education, doesn't work. It's just like when you do a training, you go on an internship. You want to train what what you've learned. And so we do an awareness score where we have certain criteria, there are some phone surveys, and then we score the clients in bands on what's the level of their understanding. And we set targets there at 70%, because we say if they are at 70%, they have all they need to actually go and file a claim. So that's the way we approach it. But financial education is a massive issue. Yeah.
Thanks. And one last question, and then we'll have lunch afterwards, so you can ask your questions directly.
Hi, I'm Annalisa Biancassi from the Microinsurance Network. I was interested by your comment where you said that at the moment when the clients take up a loan, they're not really open to hearing about the insurance. They're not really focused on that. And I was wondering if you've identified other ways to communicate with them at a later date, and also whether you have, whether there's a channel with the registered hospitals. When the clients come in, do they have a way of checking, do they have this insurance or not? And linked to that, how do you get feedback from your clients? What are your channels there?
Okay, thank you so much. One is about how we communicate, and then feedback. In terms of communication, it starts with us at the time of the appraisal to introduce the topic. But as I did indicate, they are not that focused. Now, we have TVs in all our branches, and here we run different programs so that customers can continue to understand other products other than the loan, which is now one of them is micro insurance products. And here they pick up information. But also we have brochures that we give out to our customers to get to learn that this is what you have taken as part of the loan, you can as well claim. Also in our annual report, we try to communicate. We put it forward to the customers and to the public that the bank has partnered with an insurer, and when our customers are out there sick, they can always get this. But I cannot say that it has proved to be good enough. That's why we have to go out and invite. We always have customer weeks, and what we have chosen to do during the customer week, what do we want to communicate? Because the loan, they know. Saving, they know. What don't they know? So now we are going out with what they don't know. And this is about insurance. And I think with that, we shall have covered quite a number of them. But those are the customers who are going to come and attend the workshop. So this is going to be a continuous thing that we are going to do. The next question was about
Feedback, client feedback.
feedback. Feedback, one, at the bank head office, we have somebody who is appointed to take care of microinsurance products. And this person is supposed to follow up with customers because we have the data coming through and calling customers of how they think paying that 1.5 has impacted them. And here I want to share with you one of our customers called Robina, who was taken to hospital with a problem of her leg and had to be amputated. She stayed in hospital for over 30 days. And in that, she was able to be given about $660. For a local person, my dear, that is a lot of money. Because such operations are done in a public hospital. So she spent less, and she had something to take care of her thereafter. Now, this testimony alone gives customers trust that if I ever get a problem, I'll also be helped. So you use such a claim, an outstanding claim, because it touches the person. It is physical, that somebody had 2 legs, now has 1, but who helped them survive. And that message runs around, and we publicize it, and then people get to know that really it works. Because for somebody who has malaria, after a week can easily forget that insurance did something. But having lost a leg is not something that you can forget easily. So those are the ways. So those customers give us feedback, and the best feedback comes through when a claim delays. because this person is angry, so he's able to speak out. Sometimes people keep quiet over good things, but that time when they want the claim, you see, you deceived us. So you learn that people have that feeling that you're liars. Then people will say, I put in my request on 1st, it's 30th, I've not seen something. So such feedback helps us to improve the way we deliver microinsurance service.
Okay. Well, thank you for all your questions. I'm going to invite Mark Hennigan for the closing remarks for this session. Mark is the CEO of ACA, which is the Association of Insurance Companies and Reinsurance Companies here in Luxembourg. Thanks, Mark.
So thank you very much for inviting me to do the closing remarks after this very interesting panel discussion between Matthew and Jill. So it's my hard duty now to wrap it up and to get the learning out of it. If you permit, I've had a long activity also in the insurance sector in Luxembourg, and I learned a lot of things today about customers which behave quite the same here in Luxembourg as well. So we were talking about the need, and I think, and in your bank, it's very important you allow customers by granting loans to have an existence, and also to give the coverage and the risk mitigation by providing micro insurance. And we also understood that it's not necessarily micro insurance or insurance itself which is asked by the clients. So you help them if there's a big problem to solve the problem and to get along with that problem by paying money. I mean, that's at the end of the day what's coming out. The product must be very simple and understandable, and I think what's very important is that you manage to have microinsurance or insurance itself with no exclusions, and which is an important topic, and it also makes it very much easier to communicate with clients which at the end of the day, as you said, have a level of education and financial education which is not that high. So I think we also can learn a lot from that experience. It's a customer experience you pointed out, which at the end of the day makes that the clients will more and more trust the bank, because it's the bank that came with a solution, and behind also then the insurer who is behind. Trust is key in every insurance and banking relationship, and you pointed out, and I think it's very important, the bank gives the money and has to trust the client to give it back. And for the insurance, it's the other way around. So the client gives money and hopes to get something back, and trusts the insurer to be well treated and have an excellent customer experience when there's a need, and the need is always when there's a problem, and an existential problem. And I also took from today that the digital possibilities offered by mobile phones, to put it, even if they are not smartphones, as I think a lot of people have here, are the basis of a good customer relationship, being it by being informed about the payment, and also about communicating with the insurers. and with quite, I think, the number you pointed about more than 440 million mobile subscriptions in Africa, it's quite a high penetration, I think, so that gives you the possibility to efficiently deal, find, and pay your customers. So I think, and I would like to thank you all for this very interesting panel discussion. And as a Luxembourg Insurance Association, we have sometimes the request, but what are your members doing in microinsurance? And I'm sorry to give the answer, which is here in Luxembourg, we are not really entitled to do it because it's a highly regulated sector. But I also know that a lot of our members are active in other countries and are very active in microinsurance. So I'm a little bit legitimate to be your guest today. So thank you very much, and thank you also for putting this conference up and for making this speech possible. Thank you very much.
Thank you, Mark. Maybe one way that the insurance companies could indirectly support microinsurance would be to support the microinsurance network. But anyway, that's another discussion. Just before I let you go to go and eat, I just have a few thank yous to say. I'd like to thank the Development Corporation and Humanitarian Affairs of Luxembourg, the Luxembourg government. In fine, I'd like to thank the Banque de Luxembourg for allowing us to do it, use their auditorium, the Microinsurance Network, all of you, the people online apparently, and of course my distinguished guests. So thank you very much. Enjoy your lunch.